Awesome, Sylvia. Thank you.
Yeah. So the introduction, and then we get right to the questions.
Perfect. Thank you.
Yeah. Anka Metcalf is the founder of TradeOutLoud, an international trading educational company born in January 2011, offering detailed, specialized, and complete trading education for active equity and futures traders. Anka has been active in the day trading and investing arena as an independent professional trader since 2003. She has over a decade experience in investment banking, and she is certified from numerous financial institutions through Europe and U.S. She is an experienced equity, Forex, and futures day, swing, and position trader. She's a respected technical analyst known for her precision in determining market conditions and pinpointing market direction with high accuracy. Welcome, Anka. It's nice having you.
Thank you, Sylvia.
And thank you
great.
for giving me the honor to speak with you.
It is a pleasure to speak to you and to speak with your traders today.
Yeah. So maybe you can start by telling us, first of all, why is trading important to you, and how did you get started into trading, and what was the turning point for you to take up trading professionally?
Okay, those are great questions. And since graduating college, I have worked in the banking industry, so in the financial industry, and I had the privilege to work into the international division, which was international division that was handling all the overnight trading activities, and I was fascinated by everything that was going on, and I was very fortunate to have the opportunity to work in the financial industry right from the get-go, and after the banking industry, I have transitioned to investment banking. So I was exposed to having colleagues that were running hedge funds, colleagues that were doing a lot of financial planning, wealth planning. And I was very much attracted at that point into going on my own and trading my own money. And that was for two reasons alone. And first off, I wanted to start managing and growing my retirement account at possibly a faster pace, if that would be possible. And also try to earn an income through day trading. Now, I have been swing trading for a very long time, and I was swing trading my own accounts for a very long time. But I was never I never dabbed into day trading. So there are a lot of similarities between the two styles of trading. But definitely, it's a little bit of a hassle, and it's quite a challenge when you pretty much decide that, okay, you know what, starting today, I am going to resign and I'm going to start trading my own accounts. And it is a little bit of a pressure because you want to create an income immediately. And that's why I was drawn to day trading first and foremost, because day trading is an income producing style of trading. And then I could do on the side my swing trading, which is a wealth producing style of trading. And that's how I came into the financial industry. One of the reasons why, and a lot of people probably are going to find this, as being a little bit funny. One of the reasons why I wanted to get into trading and manage my own money is because not only the liberty of having your own schedule, but a lot of traders are saying, oh, I have so much time for myself. I don't think that's the case. I think that I work really long hours. My trading day starts at about 7:30 a.m. and I'm all wrapped up for the day trading portion of it around 5 p.m. Eastern. Also, I look at charts at night. So I'm a very dedicated trader when it comes to charts and everything, right? Because you want, you're trading your own money and you want to be hands-on. And so the trader's job is never, it's never. So if you're looking like, I want to make this very clear. A lot of traders are gravitating towards trading because they think that, oh my gosh, I'm going to have so much free time. I'm going to do this. I'm going to do that. No, you have to consider it as your own business. So the time that you put into trading is basically translates into the results that you are going to have. And that's how I came into trading.
Okay. And so like from your bio, it says that you worked through Europe and then in the US. So at what point did you transition from working from, the corporate to managing your own money and also now managing other people's money and forming your own company? Like
Well,
after many
yeah.
years of trading.
So after I graduated, I worked in the financial industry in Europe, and I worked in several countries. And I got married. I came to the U.S. and I started working for an investment firm. And basically, the main reason was to accelerate my retirement account through my own efforts, through my own trading activity, and also have, like I said before, an income producing style of trading, day trading, that can provide me with the income to pay the bills, pay the mortgage, etc. And one of the reasons why I loved the fact that I can work for myself is basically you don't have to waste a lot of time commuting. Here in the US, first off, we had a house and we lived in Detroit, Michigan, and I'm in Detroit, Michigan right now, and we have another house in Boca Raton, Florida. So basically, I was wasting a lot of time commuting from where we lived to where I worked. So it was about an hour and a half commute just to get to work, and about an hour and a half, depending on traffic, just to get back home. So I was wasting about 3 hours a day, and I was working long hours. I was leaving the house around 7 o'clock in the morning. I would be back at 8 or 9 o'clock, and we did have a lot of clients. We did a lot of presentations when I worked in the investment industry, and I was working very, very long hours. So if I was going to work those amount of hours, I wanted to work for myself, and that was the number one motivator. So first off, I want to cut the waste time. 3 hours a day for me was a waste of time. And then the other thing was that I wanted to manage my own money and, trade my own schedule. If I was going to invest, 60, 70 hours a week, I wanted to invest them for myself.
Yeah. And you mentioned something about the earnings that you get from day trading and swing trading, that in terms of income and wealth. Why is it that you classify those two, as one as an income and then swing trading, which is more of long term, as a wealth generating activity?
Sylvia, I'm really glad you brought this up because for anyone that has been trading for a while, this is, just like a simple answer. But for anyone starting to get into this industry, there are some differences. So when you're day trading, you're basically initiating trades and you can exit the trades within minutes or within hours. When you're swing trading, you have your capital all locked up into that trade, and you're waiting for the market to definitely provide you the opportunity either to continue higher, whether you're in a long, or continue lower. And oftentimes you may have ranges that are happening in the market, and you have your money stuck into a specific trade, whether you're, swing trading stocks or futures or swing trading currency. So you have your money all locked up. You could take your money out every day if you wish, so you have a good handle on the money. That's cash for you. Where the wealth producing, right, what I'm doing, the way I'm managing my money is that I have two accounts, right? I have a swing trading account. Well, basically I have three accounts because I have my I have my retirement account, which is separate. So I have a day trading account, I have a swing trading account, and I have my wealth account. So in my day trading account, I take all my day trades, everything that I day trade, whether it's a stock or whether it's futures. I focus now on futures trading. And for the swing account, these are trades that I carry on for a few days or even for a few weeks. And in my investment account, I carry positions for months or even for years. And the one thing that you need to differentiate is that you are going to wear different hats. If you're a trader that adopts these styles of tradings, these three styles of trading, you need to differentiate and say, okay, when I'm trading my day trading account, I'm focused on this day trading and I'm focused on generating an income for today. I'm generating an income for this week. And that's a great question because a lot of traders are asking, okay, so how do you take money? When do you take money out of your account? So basically what I work every single day, I work on in my day trading account, right? And at the end of the month, I take out whatever I make within that month. And I take it out and I put my account back to the original size. And in my swing trading account, I basically leave everything in. So I compound. So I increase my position buying, I increase my risk level, etc., gradually as the account progresses. So I never pay my bills from my swing trading account.
Okay, that's very interesting because you're actually the first trader I have interviewed who has multiple trading styles. Like most people are either or swing traders or day traders, but it's it's nice to know that you can do not just one kind
Yeah,
of trading
Sylvia.
style.
Yeah, absolutely. You can do all of the styles. You could absolutely do all of the styles. It basically trading is the same. So if you're a day trader, you know how to swing trade. The only difference is the time frame. I mean that's literally
Yeah.
it. I mean there are some other similarities and some other differences, some other nuances, but basically if you know how to day trade, you know how to swing trade. Or if you know how to swing trade, you know how to day trade. And over time when you're going to start, when the traders are going to start making money, they want to diversify. And you want to shift towards swing trading down the line. So I see swing trading in let's say I'm a very active trader right now and I'm trading all these three styles of trading because if I see opportunities along the way, I'm going to take them. But let's say 5 years from now, I don't see myself engaged into day trading as much because you want to ease out, right? So day trading is a little bit more consuming because you're in, you're out. Your attention has to be 100% on price action. Where if you're swing trading, you're a little bit laid back, you can unglue yourself from the computer. You could take trades on larger time frames, support resistance on those time frames, hold a little bit better so you don't have to you don't have to micromanage the trades like you basically do in day trading. So down the line, I think it's great if you want to be a day trader and if traders are more attracted into day trading than anything else. I mean, honestly, most of the traders that I have met and have encountered throughout my trading career are more attracted to day trading. But the reality is, and that basically, if you're a swing trader or a position trader, you're going to do much better as a trader than as a day trader because uh,
Yeah.
I'm sorry, what?
Because there's less pressure and it's more long term, so you don't have to have you involve
Exact,
yourself. Yeah.
exact, and not only that, because everybody wants more free time, but it's about technicals. The technical levels on higher time frames have a better response to price than day trading time frames. And plus, when you're swing trading, when you're going into higher time frames, you're basically stepping aside from all the algo action, whether you're trading Forex or whether you're trading futures or stocks or anything that you're doing, you're not going to be whipped by algos. And that's the reality because in day trading in, let's say, 2019, uh, and the day trading scenario has changed dramatically since last year, since we had that volatility spike to the downside in the market, has changed dramatically. There's more fear. The market is more responsive to news. I mean, you get a tweet and the market starts rallying. You get another tweet, the market starts dropping. It's really sensitive to all the external factors that are coming in. Where if you're trading a swing trading time frame, then you don't have that kind of pressure. You're having the price gyration, the oscillation, but you're not getting stopped out as often. And it's a much, let's say, in my opinion, not safer, but it's a better trading style, swing trading. The problem that I see here with swing trading, and especially futures, was that there was an elevated risk per trade level. And a lot of traders are drawn to futures trading or Forex trading or what have you because of the relatively low startup cost. But they don't know that they're embarking on a journey where they're going to blow their accounts and they're going to come back into the game. They're going to fund the accounts again. They're going to blow it up again. So this is one aspect and one difference between day trading and swing trading.
Okay, understood. And so you've been trading for close to 16 years now, almost 20 years.
16 years, 16 years professionally on my own. Yes.
Okay. So over the years, do you have like a specific philosophy or a belief about how the markets operate? And because the markets evolve over time since you started trading, I'm sure it's not the same way the markets have been reacting or operating. So do you have any belief about the market that shapes how you trade?
No. I think that we are getting more. So you mentioned the difference 16 years ago when I basically started trading professionally. We did not have a lot of algorithms that were creating so much drama. And we were not trading in such a high volatility environment. We did have volatility. Volatility has always been in the market. Market is always governed by fear and greed. But as a philosophy, keeping it simple. I kept my trading extremely simple. And this is what worked for me. I think that the market structure is changing over time with the presence of algorithms. There is very little human interaction. There is only less than 20 to 25% human interaction right now. All the market volume is generated by algorithms, and you have to know how to trade with these algorithms. And there are advantages to this. A lot of traders are saying, oh, the HFTs, there's a huge disadvantage. No, there's not, because they're pretty much predictable at this point, because they are, let's face it, who's programming these algos? Institutional traders, right? Institutional traders are giving the program, are giving the setups, are giving, the strategies to the computer programmers, and they develop the program from which the algo is reacting. So there is less interaction based on fundamentals like it was before, right? Because before you wanted to invest in a company that is solid, et cetera, et cetera. But now you're seeing, let's say, a stock report earnings. Let's say they have good earnings and it's moving down. And that's a huge buying opportunity right now, because before, let's say the stock kept on going lower before it bottomed out and before it hits some kind of level of support. But now it's trading on support, it's trading on resistance. So it's respecting technicals one-on-one. It's basically this market is all about technical analysis. That's all there is. Support, resistance.
Okay.
Yeah.
So would you say today the person who has systematized their trading style has more advantage over the one who still trades on a manual sort of way.
Absolutely. Yes, absolutely. You have to be very focused on technicals because that is where price is going to react. Technical levels 100%. And I'm a technical trader, 100% technical trader. When I stepped into this industry and before that, I was very focused on fundamentals. I did studies. I looked at stocks. I looked at earnings. I looked at the progress of the stock. So I was monitoring everything. Not anymore. So I could care less right now what the narrative is, what the international context is, or any other factor that may influence price at this level, because it's all down to technicals.
Okay. Without giving too much away about how you do your market overview and how you place your trades, what can you say is your edge over the years that you've been trading?
I would love to share, my process, my daily process, because I want other traders to succeed. So I'm not keeping it a secret. I've always shared it. And I think
Okay.
I think one of the most important things into trading is to have a very structured approach. No matter at what time of the day you are trading, no matter what market you're trading, you have to have a system in place. Write down that system and respect it every single day. So, and also have a little trading plan. You don't have to have like a flight manual, like a book. No, it's just one piece of paper where you have everything simplified. And if you're just dabbing into trading right now, just and I do this every single day. I've been doing this for more than 16 years right now, and I'm still following the same steps that I did 16 years ago. So first off, before I even turn on my computer, I check the economic releases. This is the most important thing because economic releases are the number one influencer in the market. And I pay attention to everything that is coming out internationally and also domestic here in the U.S. Whether we have, I don't know, Australian news, Australian rate, definitely that may be an influencer for gold. If we have news out of Canada and rate decision or an OPEC meeting, that is definitely going to influence crude oil. If we have ECB press conference, I don't know, in Europe, then that's definitely going to influence the euro. It's going to influence the dollar. It's influencing these two currencies. It's going to influence the indices, whether it's DAX or whether it is the U.S. future indices. So make sure that and then again, as a rule, I never trade any kind of news announcements. Any kind of news announcement. I
Okay.
typically, just step away. I don't care. I don't want the drama. I just wait for the price to settle because there are plenty other trading opportunities along the way. And trading quantity is not me. I'm all for trading quality trades with high odds trades and going full throttle in those in that specific direction. Um, After you sorted out all the economic releases, you pretty much have a well-established plan as to when you should be executing a trade. The other thing that I teach in my classes is that every time you look at the market has a certain tempo. The market runs up and then it starts to pull back and then it starts to rally again. So it has a certain market tempo that is pretty much in the U.S. trading session is pegged. So it's pretty much respecting everything. All the market timing is being respected really well. And pay attention to those economic releases. Pay attention to these reversal times that are happening in the market. And look for setups that are really high quality. And as a rule of thumb, I used to be a Forex trader. I'm not an active Forex trader anymore. I see that the market is really manipulated in the Forex market. So I shifted towards 100% towards futures day trading and swing trading, other than stock swing trading. And that is because you can also trade currencies while you're trading while you have a futures account, and the leverage is great. You have great volume, great participation. So I like to keep everything simple through futures trading. And after
Okay.
every, can you repeat that?
No, that's fine. Just finalize on your process, sort of.
Okay. So after I look through the charts, I try to determine which is the time frame that the trade is setting on, because there are no two time frames that are pretty much um, going to give you the same read. There's always a time frame that will literally tell you and have a more precise, um, let's say, bias for your specific trades. I like to do my top-down analysis. I always start with the largest time frame. I zoom in to the smallest time frame, and I like to form my bias based on the 15-minute and based on the 1 hour for day trading, and always based on the weekly and the daily for swing trading. And then I just wait. I also have proprietary trigger times in the market, and I wait for my timing in the market for my specific price. I wait for my specific location and for the setup. So I need to have at least 4 or 5 odds in my favor before I take any kind of trades.
Oh, okay. And why is it important for you as a technical analyst? Because most people who are pro price action traders normally have the belief that everything that is happening in the markets has already been captured in the price. Like the price tells, what's gonna happen. So why is it important for you to look at the economic releases like a routine for you every, you know, trading day?
Because, for instance, I'm going to give you a quick example. On Thursday and Friday, we have the G20 meeting. The market has been sideways, a little bit pulling in as of this moment. I'm talking about the U.S. indices. When you have the G20, if you think that it's priced in, and if you decide to take a trade right when the announcement is going to kick in, you're almost 99.9% you're going to be stopped out. There's 1%, 0.1% that you can get lucky and you could get into the same direction that you had the trade initiated on. But let's say FOMC meeting is a big deal here in the U.S. I never take trades. I never take trades ahead of the FOMC meeting. Why? Because that's total gamble. So I don't gamble. Not FOMC is never priced in. I mean, it could be potentially a little bit priced in, but if you're a swing trader, yeah, you could be priced in because you have a stop, you have a few dollars stop. So that's fine if you're trading stocks. Or you have, I don't know, 20, 30 point stops into your indices, which is fine because you're going to, you're sidestepping the algo action. But when the news announcement is coming in, it's having huge gyrations in price. And if you're a day trader, trust me, the price is never going to go your way. You're going to possibly more likely going to be taken out before you're going to take you're going to take any profit. Another example, if you're trading crude, tomorrow is Wednesday at 10:30 a.m. Eastern. You have crude oil inventories. If you're a day trader, okay, are you going to guess the inventory numbers? Yeah, you can guess and just say, yeah, but I'm not into the guessing game and I'm not a gambler. So if I want to take a position, let's say in crude, I'm not going to take it 5 minutes or 15 minutes ahead of the announcement. I'm going to take it after the announcement, after everything is all said and done, after support resistance levels have been tested, and after the true range has been already set, and I'm going in for the confirmation. And that again is coming to the fact that you don't want to be a liquidity provider for the market, and you want to get in exactly at precise locations at precise time when you know that the price is going to move into your direction. And even so, you're going to have some losses, but your losses are going to be so minimal.
Okay, so in that regard, what principles do you apply when it comes to risk management and making sure that you size up your positions in a way that you don't lose, you protect your capital?
That's a great question. First off, I just wrapped up a class last week and I teach risk management and position management in a trade. Everybody's risk should be different because there are no traders that have the same account size. And if you are a trader, you need to allocate a specific risk amount that should not exceed, especially if you're a beginner trader, 1% for your account per trade. So that is 1% for your account per trade, depending on your account size. Some traders, have small account sizes of like, I don't know, $5,000, and some traders have account sizes of like $2 million. So the risk level is different for each and every single trader. Depending on this risk level, so when you're engaging into a trade, you want to look at the charts that offer you the probability to make at least twice, three times, or even more in that specific trade. So if you're looking at a chart and say, hey, you know what? I see resistance all the way here. So I see a profit target all the way up here and I see a tradable void. Yeah, you can go ahead and take the trade. But if your target is just less than one risk unit above your entry, you are going to skip the trade. By being selective, you're given the opportunity to take less trades, but you're maximizing your odds for a future trade. I typically, I'm a day trader, so even though I consider myself as an active day trader, I don't take more than 1 to 3 trades a day, because you do not have 10 high probability trades a day. I do not know of that is, let's say, that makes a living, a good living, let's say, by taking 10 trades a day. I don't know. I know a lot of traders that make great living and take only one, maybe none, or maybe one trade every other day. Because the worst enemy for day traders is over trading. And getting in, they think that, oh, okay, I'm gonna get in here and I'm gonna try to get in for a very, very small gain. That's how you risk your capital, and you're gonna end up just losing your whole entire account, and that's, refunding, et cetera, et cetera. So I want to get back to so then basically on your account size, you need to position size according to your risk level. So what do I mean by that? The difference between your entry and your stop represents your risk. And according to this risk level, you're going to position size for your specific risk, depending on your account size.
Okay, so what would you say like is the ideal risk reward ratio? Is it like 3 to 1?
Yes,
Like
three to
what's the
one would be
minimum?
ideal. 3 to 1 is ideal. It's acceptable to have 2 to 1, but you have to be very good for 2 to 1. And if it's 1 to 1, that's a disaster, because here's the risk. You have a first trade. Let's say you're going to risk $100. Let's keep it simple. You're going to risk $100 on a trade, and you're going to lose, right? A lot of traders are getting upset and they put on revenge trades, and they think that if they double up, right, their risk level, their second trade, they're going to make their money back from the first trade that they lost. So let's say they double up and they risk $200. And let's say that trade doesn't work. So now they're down $300. Now, if they put another trade on, and if that trade, they get, again, very upset, and they decide, you know what, I'm just gonna get all in. I'm gonna get in with $300 this time, because I want to make up for my 2 trades, because I lost $300. And if I use another $300, and if I make that one little R back, I'm going to be break even on the day. Guess what happens with that mentality and being aggressive and putting on trades that are revenge trades, etc.? That trader is going to lose that $300. So now you're down $600, right? So that's your allocation. If you're taking 3 trades a day, that's your allocation for 2 days. So you just wiped out 2 days of trading. And the reality is that if you trade properly and use the same risk amount and position size, really gauge and evaluate your risk level per trade, your position sizing, because position sizing, a lot of traders don't know, but position sizing is what makes or breaks the trader. It's not the strategies, not the managing, it's not everything else. It's actually position size. You don't know how to position size, it's going to make or break your account. And then if you respect, because it's about discipline. You don't have the discipline, you're not good for trading. Just wrap it up and do something else, because trading is not for you. You're either a very disciplined trader, and the market never forgives you. Okay. You never get a break from the market if you're not highly educated. So what happens if you're applying the same risk on every single trade? Guess what's going to happen? If you have a first trade, you have the patience to wait for the first trade, you risk $100. Let's say you lose. Fine. Okay, I'm losing $100. You have another trade. You apply the same management. Let's say, I don't know, you're getting some unexpected news, or tweets, or what have you in the market, and the market takes you out. Okay, you have a second loss, but that's only $200. You've just risked $100. You just risk another $100. Guess what? On your third trade, let's say you lose on the third trade, you have $300 that you lost. If that is your allocated amount per day to lose, you're done. You're done. You shut down your computer, okay? And then at the end of the day, you go for a walk, you come back in, turn your computer back on, and you're not going to get into trading. But you're going to see what went wrong with those trades. And you have to evaluate what went wrong with those trades. And you do your self-analysis on those trades. Print out the charts. Print 2 charts up. See what worked and what didn't work. On the first chart, mark the areas where you got in. Mark the areas where you have the stops, and mark the areas where your targets were. Now, on the other chart, mark what you should have done. And this is how you auto learn how and correct your own mistakes from trading. Now, the next day, if you come back into the market, all you put is one trade. And if that trade goes your way with making 3 R's into that trade, you have just recuperated a whole day of losses. So you see how easy it is to get back from the hole doing that. Now, a lot of traders are not going to do that. And the sad part about this industry is that 85% of the traders are not going to make it. And they're not going to make it, one, because they lack discipline, they lack patience, they lack market knowledge, and they think that trading is definitely a gamble. And when everything is all said and done, and once they risk 2 or 3 accounts, they go like, this is not working for me. So they give up. Well, in reality, it's a well-balanced, and you have to have the mental toughness to do that.
And I guess risk management is what makes it a profession, other than what people assume as gambling, if they lack the rules to follow through.
Yeah,
like you've described.
Yeah, if they don't know how to apply risk management, they're never going to make it. Risk management is one of the most important things. Yeah.
Our time is running out. I think we'll have to book you in the future to just cover like half of the questions that, we had planned out. But maybe like as we wind up, you can tell us what do you consider as a good trade, and also give us an example of a memorable trade that you've had in the past and the lessons that you derived from it.
Okay, so an example, I'm going to start upside down. Okay, I'm going to give you the most recent example. I had a trade in gold, and I have to say it's the best trade that I've ever had in 2 years, because it accelerated. It has hit all my targets in a fraction of the time. This was more of a swing trade for me, swing/position trade for me, and it hit targets really, really fast. We had an open house. I think it was about 2 weeks ago, and less than 2 weeks ago, where I called gold. The recording is still on my YouTube channel. And you could actually, if any of your traders are interested, they could view the recordings from the open house there. We have full throttle education, where we talked about risk management and everything, and position sizing and all that fun stuff. They could get it free from there. And I called gold as a long trade, and we made so much money in it, and it has exceeded our targets. And the one thing that, as the perfect, let's say, the perfect trade would be respecting your trading plan and respecting your position and being humble to the market. And basically, this is how I see how I see trading. So basically the most important thing is to respect the trading plan and have discipline. Believe me, the trading knowledge represents only 5%. The rest is all psychological, management, and everything else that you pretty much insist. Every time a lot of I get a lot of questions about just give me a strategy and I'm going to start making money. No, you're not. I could give you 5 strategies, you have no idea what to do with them, because uh, it's about putting all the pieces together. Okay, so this is what traders need to understand. It's about knowing where your entries are, knowing where to put stops so you don't get stopped out, knowing how to read the market, knowing how to read the direction, knowing how to form a bias, knowing how to calculate your targets, knowing how to trail your trade. Because what happens if you have a bad trade? You stop out. But what happens if you have a good trade? If you have a good trade, then you have to know how to manage the trade. So it's all everything is linked. It's a puzzle, and the trader needs to put the puzzle together. You cannot have this well-greased machine working if you're missing pieces of the puzzle. If you don't know how to position size, if you don't know how to calculate the risk, if you don't know how to determine the entry, if you don't know where to put your stops, because a lot of traders are just giving monetary, value. Say, I'm going to get in here. I'm just going to give it like $100 or $200. I'm going to see if it's working. They don't know how to place stops, and that's a misfortune. So trading is a very serious business. And I want to conclude with this, that you need to think about it seriously, because it's about to consume a big portion of your day and of your life. If you want to make trading work, you got to live, breathe trading and nothing else. Don't get distracted. Stop being a follower and start developing your own read on the markets and executing your own trades. Educate yourself, and you're definitely going to be on the right track for trading. So the more you work, trust me, the better it is. Time in front of the computer, time in front of the market, even if you don't trade, or even if you paper trade. And I don't want you guys to paper trade that much, because a lot of a lot of traders say, hi, you know what, I have strategies, they work. Then paper trading, it's not the same thing, because it's emotional. And
Yes.
trading is very emotional. We're dealing with the most precious commodity in the world, which is money. So nobody likes losing money. So prepare yourself for a great journey. I never have had any regret into getting into trading. But again, be prepared for long hours, and if you want to be a complete trader. So one other takeaway from here. Try to become a global trader. So what do I mean by that? Start watching the markets in general, the Forex market, the futures market. The more you understand about each market in particular, the more you're going to have the upper hand and a handle on this market.
Okay. And also, thank you for that. You have a lot of wealthy information in regards to trading. I think you should write a book. If and
Thanks, Sylvia.
yeah, you should. So where can people go to find your work? I'll put a link to your website, but I think you also have a YouTube channel.
There's a lot of free information on my YouTube channel, a lot of things that we have discussed in here that are super important. And I really want traders to pay attention to what we have discussed in here. And if anyone needs any help, we do a lot of webinars, free educational webinars, and more than happy to join these webinars. And if anyone has any trading related question, just feel free to throw it out there. Even, I mean, it's your money. Don't be afraid to ask questions. And then again, thank you so much, Sylvia.
Okay. I hope we can have you again in the future, because we've only covered maybe like half of what we were supposed to discuss.
Okay.
But thank you for your time, and thank you for your wisdom.
It would be my pleasure, Sylvia. It would be my pleasure. I'm really looking forward to talking to you again. And maybe we can chat before that.
Okay.
Just
Okay.
the two of
Yeah,
us.
that's
Yeah.
fine. Okay, bye. I'll let you go back to your trading.
Thank you so much, Sylvia. Have a good night. I know it's really, really late there.
Yeah, it's 11 p.m. now.
Oh my goodness. Have a good night. Thank you so much for having me.
Good
And
night.
definitely let's keep in touch and talk soon.
Yeah, sure. I'll send you the link to the audio, maybe in the course of the week.
Awesome. No rush. Thank you so much,
Okay.
Sylvia, for
Bye.
everything. I love talking to you. And maybe one of these days we're gonna have some time to enjoy a cup of coffee via Skype.
Sure. Yeah. Okay. Bye. Cheers.
Talk to you soon. Have a good night. Bye bye.